Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody guys. Today we will take a look at the euro currency, not because it is more interesting than other currencies, especially the Great British pound, but just because we haven't taken a look at it for some period already. So on the Great British pound, situation is relatively clear. So market yesterday we have suggested that the overall picture on the Great British pound is bearish, and we still expect the downward continuation, and that has happened yesterday. So the cable has dropped. That's why probably today it doesn't need our additional discussion. That's why we'll take a look at the euro currency right now. On the euro currency, the major pattern that we are working with is this ABCD pattern. So as you can see, market is dropping lower. It already has passed all targets, all extension except the 1618. So 1618 will be our next target. And it stands very close to the former previous lows, around 104.50 area approximately. And it means that euro currency hardly will show any drastic action prior it will hit this area. So it will continue to creep lower, whether it will be either it will accelerate or will continue this gradual action. But anyway, market should hit this target before show any other step. So whether it will be the upward reversal, deep retracement, or let's say this breakout down to the parity to the next target or something of that sort. But this target should be achieved, and we will use it as our target, and we'll form our trading plan based on this assumption that market should hit this area. As you can see on the daily chart, it's interesting that trend has shifted bullish, but price action is not. Price action doesn't support it, and it looks like the bearish dynamic pressure that usually could lead to the further acceleration down. That's really possible. At the same time, guys, if you'll take a look at the 4-hour time frame chart, you will see that market is formed the following wedge pattern. Take a look. As we contract, you will see the clear signs of the wedge. Since wedges they could be broken as to the upsides, very often they shows the exhausting moment on the market in the short-term perspective. So they could lead to some retracement, and after that market can continue move down. Or sometimes wedges also could be broken with acceleration to the downside. Currently, we do not know what breakout will follow based on the wedge itself. So daily picture suggests that probably we should get the deeper breakout to the downside. We probably should get the reaching of this target, but it doesn't mean that market can't show some retracement here and then continue move lower. That's also possible scenario. So when we prepare the trading plan, we should take into consideration both waves. What could happen, both scenarios. From that standpoint, let's take a look at the hourly chart. On the hourly chart, we see the upward action. Definitely, this action is not the thrust. This is some kind of the retracement, some sort of the it's very choppy and sloppy. As you can see, a lot of overlapping candles, these deep retracements. So this is thrusting action. This is not the thrusting action. Okay? And here we could get some different areas that market could reach. Based on this picture, I would suggest that market should reach 107 area. And from that standpoint, from the perspective of this retracement, this area looks as not bad for a possible take in the short position, because take a look at this minor ABCD pattern. A, B, C, bottom. Market has hit 100% extension, shows the normal respect that also has been was accompanied by the weekly pivot point. So you can see testing once, retracement second test. Now it stands on a breakout. So definitely market is not ready yet for downward continuation. It's trying to reach the high targets. Okay, and it tells that probably market should reach the next target. Next target will be this 1618 extension. That stands in 107, 107 over 5, somewhere in this area. So this will be the bearish agreement, so the agreement resistance, because this is the fib level from this top to this low, 618 resistance that's accompanied by the target of the ABCD pattern. So that will be the resistance. If you take a look again at the forward time frame chart, you will see that upper body of the wedge pattern stands at the same area. It's approximately 107 or 6. So will be additional resistance from this trend line. That's why this area looks not bad. So attempt for taking the short position. Because if even you will be wrong later, then market will continue move higher. At the first touch, market probably will respond and will show some meaningful retracement down, some minor bounce. And as usual, why we always call you for taking the position around the significant resistance, because the technical response of the market on existing of the resistance will let you to move your stop to the break-even and protect your position. So if you will be right, that's great. You could keep the position right to the 1 over 450 areas, market could continue move lower. If you will be wrong, and market later will break it to the upside and will show the bullish breakout of the wedge and will show the deeper retracement to the upside, it's no problem because your position will be protected by the break-even stop. Another possible level that market could reach stands with this harmonic swing. So I will contract the chart, you will see it better. So you can see market recently shows really harmonic retracement. I have extrapolated this retracement, and it points on the weekly pivot resistance one. That stands approximately at 1 or 733 area, weekly pivot resistance one. So this is also possible, but in this case we will not get the probably their wedge. It will probably transform to some channel. So it'll be probably some channel. It's also possible. But anyway, if even this will happen, if even market will continue to move right to this area, here we will get some response. It's very probable that response will be right to the weekly pivot point. So very probable scenario, if market will hit it, then will be retracement to the weekly pivot point. That will be approximately around 35-40 pips. It's not small bounce. You will be able to protect your position with the break-even stop. And only after that, market probably will continue to move higher. So that's the scenario that seems for us as most suitable in the current situation. Also, you should think whether you would like to take the position through the Thanksgiving, because tomorrow this will be the holiday. United States market will be thin, and maybe you will prefer to just wait when the market will open up to the holidays. That's also not a bad idea. So that's our current view on the euro currency. So as you can see, in a strategical point of view, in the high time frames analysis, nothing has changed. So we still stand on the opinion that market should move lower. This is mostly the tactical discussion, what could happen in the nearest hours. That probably need to some update on the euro currency that we have prepared today. So let's see how it will turn.